Welcome to Something More with Chris Boyd. Chris Boyd is a certified financial planner practitioner and senior vice president and financial advisor at Wealth Enhancement Group, one of the nation's largest registered investment advisors. We call it Something More because we'd like to talk not only about those important dollar and cents issues, but also the quality of life issues that make the money matters matter. Here he is, your fulfillment facilitator, your partner in prosperity, advising clients on Cape Cod and across the country. Here's your host, J. Christopher Boyd.
Welcome to another episode of Something More with Chris Boyd. My name is Jeff Perry. I am a financial advisor who works with Chris Boyd, and Chris is on vacation today, so I have the privilege of sitting in for him. And joining me is our senior portfolio manager for our team, Brian Regan. Thanks for joining me, Brian.
Good to be here as usual, Jeff. Hope you're doing well today.
I'm doing great. Summer is coming to an end. The official summer, anyway, is coming to an end. The kids are getting back to school or off to college or whatever the kids are doing. And so it's a time for transitions, I guess, into the fall. Any changes in your world?
My daughter is not yet in school, so that's a challenge. She's off at her grandparents' house in New Hampshire right now, having a great time.
Nice.
My son is luckily or unlucky, depending on how you view the pay I have to send them, and still in daycare. So that's fun and reliable. But it's exciting. My daughter's heading into kindergarten, so it's going to be an interesting time in our lives.
Yep, they certainly do grow fast. I can't believe that I'm saying this, but last weekend we helped move our granddaughter, Faith, into college. She's in New Hampshire at a college and running on the college team and experiencing all those new things about living on her own and starting this next part of her life. So exciting times for her as well.
That is exciting. I loved college. I wish I could go back.
We always want to go back to things that we didn't appreciate when we were there. And I did tell her that. I know it meant nothing to her, but I did tell her, like, these could very well be the best times of your life. So
I actually think I did appreciate it. Doesn't mean I don't miss it.
There you go.
It was great at the time, and I just think fondly about it. So.
Well, good luck to all the students returning to school and the parents who are dealing with empty nests or the challenges of daycare and childcare and grandparents and all that. There's a lot of things change this time of year. Brian, today I wanted to talk about an article that you wrote, and it's also a subject that comes up with our clients, I don't know, more frequently than I might think. And it's the subject of gold, meaning, should I buy gold? Should I have gold in my portfolio? I think you wrote this article in part because you've gotten so many requests from clients to answer their questions about gold. Is that right?
Yeah, it comes up all the time. So I actually just titled the article, "I get asked a lot about gold." And I was thinking about titling it, and I was like, I don't know, this seems to work. This is pretty simple, but it's the truth. It's why I wrote the article. It's my 2-page response to what I think is a good time to invest in gold, or when I think it's an opportune time. It might be what I find interesting in it is I think it flies in the face of a lot of the common assumptions that people think, or a lot of the common reasons that people come to me for investing in gold. I think oftentimes they're far off base, or they haven't thought of whenever I go into any investment, I like to think, well, why do I think it's going to go up?
Right.
And when would I want to get out of it? Under what circumstances? And
That's right.
I think that's not always thought through from the folks that come to us. And that's what this article is trying to hit on.
On a personal basis, I have never, even in my younger years when I was just starting out and accumulating assets, right, all through my savings years and various careers, and now getting near the end of my professional careers and thinking about the decumulation phase, right? I know gold exists as an investment in different, but I've never thought about it. Should I have it in my portfolio? And I see the times that now that I've been working with you guys for the last 5 years, I hear it from clients. So I think about it a little bit differently, but the times I see it most, and think about it for a second, is when I see those TV ads promoting, it's sometimes late at night or sometimes on partisan news channels that are after one segment of fear mongering, I'll equal distribute to left and right, or when I see it like in the context of some retail show selling gold coins to the public. And so I see that, but I just never really thought it should be part of someone's portfolio. When you were studying and throughout your years of managing money, has it ever come to you like this is an appropriate asset to put in my clients' portfolios?
Yeah, there was a time, there was a good stretch from, trying to remember, the summer of 2019 to probably the end of 2020, when we did have clients invested in gold. And
Okay.
the way I look at it, we're kind of jumping to the end of the article, but that's fine.
Yeah.
All around. The way I look at gold is as a currency, a global currency with a perpetual 0% interest rate risk. Rate. So put that into contrast. All the other currencies in the world have a government bond associated with them, at least all the developed currencies in the world. So if you hold dollars, you can effectively get a 4.25 10-year risk-free rate of return right now by taking those dollars and investing them in treasuries, which is very easy to do. You cannot do that with gold, right? You can't get a risk-free rate of return. It doesn't have any cash flows associated with it, but it does have historical roots as a currency, and it's still viewed that way by the capital markets as a store of value. And we can get into how that's been put in overdrive lately, and why I think when we talk about why I think it's gone up in value as of late. But when interest rates, all else equal, right? And that's always a key phrase when we talk about anything in economics, right? There's usually a lot of variables pulling on different assets throughout the world. But all else equal, if interest rates are falling, global interest rates are falling, then gold becomes more competitive on a relative basis, right? Because it's always zero. So if we go from a 4% interest rate on the 10-year to a 3% interest rate, well, then gold just became a little bit more competitive versus the dollar. And the more you have that throughout the globe, the more competitive gold is. So if you remember back when we had very low and even negative interest rates in certain parts of the globe, and then the Federal Reserve started cutting, and that was in 2018 to 2020. That's when we were in gold, and that's the logic I use that makes sense to me when investing in gold. And gold doesn't have consistent, strong correlations to much, so you really need to think about it in the context of something that makes sense to you, so that you can consistently and realistically get in, and then ultimately get out at a time that makes logical sense to you. Kind of goes back to just knowing what kind of asset you own and why you own it, right?
Sure.
So that can lead into like why when people come to me and they want to buy gold, why do they want to?
Aren't they one of their? I mean, there's different reasons, sure, but isn't the primary belief by many it's a hedge against inflation? It's going to protect me.
So that's jumping up to the top of the article.
I'm all around.
Yeah, it's good. It makes me think, right? The number one reason why people come is I think they're afraid of inflation. And there is some recency bias there because we experienced some pretty severe inflation just a few years ago, and it's still relatively high. We're talking 2.9% on core CPI and 2.7% on the headline CPI. So it's still fairly high. And you couple that with the fact that gold's been on a bull run, I kind of understand why people are putting one and one together and thinking that's the reason. But the real reason why people think that, and it's always seems to be people of a certain age, is back before 1971, which is what we call the Nixon shock, and we'll get into what that is.
Okay.
Gold, following the Bretton Woods Accord, following World War II, there was an agreement where gold would be pegged at $35 per ounce. And this helped stabilize the globe after World War II. Basically, we could lend dollars. These countries could redeem gold, and we had a kind of stable currency based on dollars and gold, really based on gold. Now, what happened was that there became more and more dollars in the economy, less and less gold concentrated in Fort Knox as it was shipped beyond the globe. And there was an underlying inflation that was known, and we kind of had a run on gold, right? People were hoarding gold and not holding dollars, knowing that that $35 per ounce was not a realistic number. So this all came to a head in 1971 when Nixon finally took us off, this effective gold standard and allowed things to float. And between 1971 and 1980, I think gold was up somewhere around 600%. So there is this, and we had again a lot of inflation during that time.
Right?
That was one of the reasons why we had a good amount of inflation. You could throw in oil embargoes, you can throw in Vietnam,
Sure.
but this was certainly a big reason. Now, since then, so if you think about that time, right, we're talking 55 years ago, there are many, many people and many clients that we have that were alive and investors during that time,
Sure.
right? I mean, we're talking, let's say through 1985, that was only 40 years ago. If you're 65 years old, you probably remember that time. And
well, it's a very impactful time in society and in the news and just in life. So,
and if you were 85, if you're 85 years old, that's probably permanently imprinted in your brain,
right.
In a bias that you might hold. So that's why I think gold is popular. That's why I think you're seeing it on certain TV shows advertised, because I do think they're trying to target specific people and maybe specific people who live through that time frame. But I don't think that's as relevant today as it was then, and I don't even think it's really close. There's not a lot of evidence. In fact, you can see that sometimes there's a positive correlation to inflation, and sometimes there's actually a negative correlation to inflation over the last decade. So if sometimes it's positively correlated and sometimes it's negatively correlated, I mean, we would reasonably say there's no correlation. It's random, and when it correlates, it's a spurious correlation. So the other thing that I think people come to us with is fear of government spending, right? This debasement of the dollar effect.
Yep.
And I actually think this makes a little bit more sense from a logic standpoint, right? Because gold is priced in dollars, and if we are devaluing the dollar, then all things equal, again, a key phrase, you would expect gold to rise as the dollar falls. But the reality is that there's not strong connection between the value of the dollar and budget deficits, for one. And when there is, particularly large deficits, it doesn't necessarily mean that gold goes higher. So there's just not strong connections between dollar strength, dollar weakness with deficits, and as deficits grow and contract, there's also not much correlation to gold doing well. So again, anything there is just kind of a spurious correlation, not evidence that we can hang our hat on. So then it comes to why has gold done so well lately? Ultimately it has done well, really, really well. And when you look at the data, it really started to shoot up, and it's like a straight line, right? It really started to shoot up after Russia invaded Ukraine. So you could say that this is the fear trade, X, Y, and Z. You could say that, it was going to lead to more military spending and greater deficits. But, when you look at the underlying supply and demand, what you see is central banks buying and investment flows is what has driven the demand for gold.
Yeah, part of your article, which was very informative to me, I guess I presumed a little bit incorrectly. Well, first of all, gold doesn't increase each year. I mean, you can buy gold mining stocks, right? That's one of the ways to invest in gold. And so the gold is still being mined and discovered, but I was surprised that it only increases by about 1.5% a year. That's very modest. And I was also surprised about where it goes.
I think that's another reason why people are particularly interested in it, right? Like, if we're going to expand, if we're going to expand the monetary base by 10%, and this is only growing at 1.5%, then arguably the dollar should go down and gold should go up, right? So that kind of goes to the spending Federal Reserve argument that I said doesn't really holds much water. But what happened after the Federal Reserve? What happened after Russia invaded Ukraine was the United States took Russia off the SWIFT system, which really made their reserves outside of their country worthless because they couldn't trade them, they couldn't interact with them, which is the SWIFT system is basically a communication mechanism between banks globally. So they had no liquidity. So what were they going to do to support their own currency and their own economy? One of the things that they started to do was to buy gold. And I don't think this just happened in Russia. I think this happened in China. I think this happened in Brazil. Some South American countries, some African countries. So I think there has been a global shift where people were less reliant on treasury securities or Eurozone securities and started buying gold. Now, in addition to that, there is price momentum, right? People get excited that the price is going up, so they go ahead and they buy more. So
Costco got so excited they started selling gold.
Right, and
to consumers, right? You can buy.
Yeah, and they can't keep it on the shelf, right?
That's right.
Yeah. So it's very interesting. Now, that's why it's gone up. Now, what happens if there's a ceasefire? Does it reverse? What happens if there's a slowdown in the price appreciation? Do investors get bored and stop following that momentum? So this, I'm not in it, but I wouldn't know when to get out of it, right? Maybe you get out of it if there is a ceasefire, right? I think there's a lot of questions there. What if we, start to normalize relations with Russia as part of trying to get a ceasefire going on, and they start buying more treasuries and euro securities rather than gold? There's a lot of questions, a lot of geopolitical impacts here that I think could make swift changes in gold. It's what I would consider it being is I don't. It's more about an investor, or in this case, geopolitical circumstances than it is economic realities. And I'd rather hang my head on economic realities. So that's the big reason why we've stayed away, why I caution people, and also why I've been wrong. I mean, there's no doubt when you have gold's been on a run like this, I wish I was in it. I'm comfortable with the fact with why I'm not in it. I could sleep at night knowing that I just didn't miss something obvious and against my investing principles. But of course, I'd love to be in this bull run, and congratulations to those that have participated. But I'd heed caution, especially as we flirt with a ceasefire.
Well, in the category of speculation, which gold might fit into, you could say that about a lot of things, Brian. At one point you could have been disappointed that you didn't buy AMC theaters, right? Or some
Sure.
on some other momentum driven or some other cultural thing, or just cultural phenomena or fear based product that was hot for a moment, but certainly isn't an inappropriate investment, which what we're talking about.
Ultimately, you want a process that's going to work for a long time, right? I mean, it's nice to get lucky and get bumps, and maybe you saw this coming, and maybe that's part of your investment philosophy, but it's not consistent with mine. It's not consistent with my process, so I haven't been in it, and that's okay. We've done things that are within the strike zone of what we're comfortable with, and we've done just fine with that. And quite frankly, as I age and as I learn more, my strike zone gets wider, and maybe next time I'll develop a philosophy around doing something lucrative in this type of situation.
Well, there is some behavioral elements to this when you're talking about speculative items, and the fear of missing out is one of those things. As prices increase with anything, it could be a cryptocurrency, it could be AMC stock, it could have been tulips, right? Whatever the thing of the moment is, that people have a fear that they're missing something, and they get in without doing their homework, or without doing their due diligence, without having a plan on when to exit. And even if the performance might be really solid for a given asset in any one given period of time, the behavior of that individual speculator, consumer, investor doesn't always match up with like a long-term chart or an average of 10 years, or a longer term vision of gold. And I would guess a lot of people who decide that they want to get in gold or out of gold, or some of these other types of investments that aren't traditional, will say maybe buy at the wrong time and sell at the wrong time. And all this based out of fear and or greed.
I think anytime you're doing something just because it's going up, you're playing with fire.
Right.
You might get lucky, you might not. If you're doing something like that, I would have a tight trailing stop on it, because you're speculating. And in my personal account, I've done things like that before.
Sure.
It hasn't been hasn't been anywhere close to the bulk of my wealth and investment performance. It's more like for fun than anything else.
Well, that's a great point, Brian. And we deal with this with clients, and not just on gold, but it could be on cryptocurrency. It could be on wanting to do some trading on their own. And it's all okay if you have a financial plan, and your financial plan, and you have goals, and you have targets, and you're moving towards those targets on a successful rate, or you're already there. It's fine to speculate with a very small portion of your assets. But that's just not what we're talking about today. We're talking about does it belong as a core holding, if you will, in your long-term investment strategies? And I think
more.
Yeah, when people go into some of these fear of missing out category things, I think they need to do some homework. I would guess most people who are trading gold don't know that it's even taxed differently than other investments. It's taxed at a higher rate. It's not a capital gain. It's considered a collectible. I would encourage people to look at liquidity issues, depending on how you buy it. If you're buying a mutual fund, or if you're buying an ETF or something related to that, well, that's going to be very liquid.
Well, liquidity is a huge problem with gold, right? You talked about those
Right.
people running out and buying gold bars.
Right.
What if you wanted to cash in on the gold bar?
That's right.
I don't even know how you would do it, right? You can't sell it back to Costco. I don't.
No, you can't return it.
Costco's more than happy to take your dollars.
Yeah,
and they're making
it went
a margin
down
on that, by the way.
$1,000 an ounce. You can't bring it. You can't return it with the receipt. No.
I honestly, I don't know. I don't know. I don't own any gold bars. There's nothing buried in my backyard. I don't even have a backyard. But
Well, it does
I wouldn't
bring
know.
up.
I wouldn't know what you would do with it.
It does bring up a couple of risks that I'll just briefly share that I am aware of, not personally, but through experience of other people. It does have a security risk, meaning if you have anything valuable in your house and it's not secured, it's vulnerable to theft or loss or catastrophic fire. Gold melts. And
stolen too.
It could be stolen. Absolutely.
People find out that you're holding gold bars in your house.
Don't take out your gold bars and show all your friends at the football party. But it's real. It does have those issues, those types of dangers to losing them. Also, if you're thinking about buying and you're watching one of these TV shows or something in a magazine, or you hear something on a podcast that's promoting something, click this link, buy some gold. The FTC, the Federal Trade Commission, has been very active about putting information out there about fraud and scams related to gold, either non-delivery issues, or sending you something that actually isn't gold, or sending you underweight, products. And on the coin side, it's just as bad. And the transaction costs, these companies who are buying and selling your gold, as you indicate, probably selling you more than buying your gold, there's significant transaction costs that are involved in these. They're making money, and there's a spread for them too, just like some other investments that you buy. So gold is definitely, in my view, a speculative item. It's something that if you you really want to get in, make sure it's a small part of your portfolio. Make sure you understand the risks. Make sure you understand the dangers of storing it or the dangers of buying and selling it. It's a really buyer beware. Tread lightly and use caution.
Yeah, and if you want to read the article and get some more insight, it's posted on my LinkedIn page. You should be able to access it. It's called "I Get Asked a Lot About Gold." There's a picture of a bunch of gold bars. Read it. Disagree with me. All that's fine. I encourage it all. Oftentimes, if I can increase my level of understanding by someone disagreeing with me, that's great.
Absolutely.
If you disagree with me and I don't understand what you're talking about, it's
Mm.
fine too. So and at the very worst, you might learn something about what I've written and what I think.
Absolutely.
So feel free to go on and give it a read.
Thank you, Brian, for your time today and your expertise on this subject and all the other ones that we enjoyed talking to you about. And thank you all for listening. Please follow us on your favorite podcast channel, Spotify, Amazon, Apple, whatever it is. Subscribe, like us, give us a good rating. It helps our algorithms and spread the word so other people can be informed and entertained, hopefully, by listening to our podcasts. Until next time, keep striving for something more.
Thank you for listening to Something More with Chris Boyd. Call us for help, whether it's for financial planning or portfolio management, insurance concerns, or those quality of life issues that make the money matters matter. Whatever's on your mind, visit us at somethingmorewithchrisboyd.com or call us toll free at 866-771-8901. Or send us your questions to amr-info@wealthenhancement.com. You're listening to Something More with Chris Boyd Financial Talk Show. Wealth Enhancement Advisory Services and J. Christopher Boyd provide investment advice on an individual basis to clients only. Proper advice depends on a complete analysis of all facts and circumstances. The information given on this program is general financial comments and cannot be relied upon as pertaining to your specific situation. Wealth Enhancement Group cannot guarantee that using the information from this show will generate profits or ensure freedom from loss. Listeners should consult their own financial advisors or conduct their own due diligence before making any financial decisions.